Argentina, the second largest country in South America, known for its rich culture, vibrant arts scene, and fervor for football, has a tumultuous economic history that continues to impact its present situation. Before we begin, make sure to click the like and subscribe buttons to stay updated with the latest videos. For many years, Argentina has battled economic instability, characterized by high inflation, heavy debt, and recurring financial crises. This has resulted in a series of booms and busts that have marked the nation's economic trajectory. After a severe economic crash in 2001, which resulted in one of the largest debt defaults in history, Argentina began a slow and arduous process of recovery. This was fueled by high international commodity prices, sound fiscal and monetary policies, and a competitive exchange rate which helped boost exports and attract foreign investment. This period of growth saw Argentina quickly rise from its economic ruins, experiencing impressive economic growth and improvements in living standards. However, this recovery was short-lived. Despite these promising developments, the country struggled to maintain consistent growth due to underlying structural issues, including high inflation, fiscal deficits, and an over-reliance on external borrowing. By 2018, Argentina was once again in economic turmoil, with a rapidly devaluating currency, mounting external debt, and skyrocketing inflation. The country had to seek assistance from the International Monetary Fund, marking the start of another economic downturn. This demonstrates the fragile nature of Argentina's economy, where periods of growth can quickly be overshadowed by economic instability. But why is it like this? To understand the economic situation in Argentina, we must first answer some questions. 1. How serious is Argentina's crisis? 2. How did things get so bad? And 3. Can things get worse? How serious is Argentina's economic crisis? And where do things stand right now? Argentina's economic crisis is incredibly severe, and it's been struggling with the effects since 2018. The situation has grown dire, with inflation rates remaining stubbornly high, often exceeding 50% and even hitting a staggering 103% in February. This means that the value of money is dropping incredibly quickly, making everyday items more expensive for the average person. Furthermore, the economic downturn has not been a short-term issue. Argentina has been in a state of recession for the past 3 years. The World Bank even points out that since the 1950s, Argentina has spent more time grappling with economic recession than nearly any other country. The human impact of this crisis is deeply troubling. Today, almost 40% of Argentines are living in poverty, a significant increase from about 25% when the crisis began. Despite the dire circumstances, the current inflation rates still haven't reached the astronomical levels seen during Argentina's hyperinflation period from 1989 to 1991, when annual inflation exceeded 3,000%. In addition to the ongoing financial turmoil, Argentina is also dealing with a historic drought that threatens to plunge the country into another recession. Economists predict that Argentina's GDP, a measure of the country's economic performance, could fall by 3% in 2023. Inflation is taking a significant toll, eroding the value of salaries, reducing people's purchasing power, and leading to decreased consumer spending. The drought situation is adding fuel to the fire, damaging Argentina's crucial exports of soy, corn, and wheat. These commodities are critical to Argentina's economic health, providing jobs and contributing to tax revenue. The country's main grains exchange is predicting a soy harvest of just 25 million metric tons, a considerable drop from the 5-year average of 45 million tons. Argentina's looming recession poses a significant challenge to the country's agreement with the International Monetary Fund, IMF, making it even harder for the country to achieve the critical economic targets set under the agreement. So where do things stand right now? The country is at a critical juncture, grappling with skyrocketing inflation, dwindling commodity exports, and the threat of yet another recession. It is clear that Argentina's economic woes are far from over. How did things get so bad for the country? The state of economic turmoil that Argentina finds itself in today did not happen overnight, and it's a result of a combination of factors including missteps in economic policy, a history of currency instability, and difficulties in securing international financial support. The crisis began to spiral out of control back in 2018 when a severe currency crisis led to the Argentine peso losing half its value against the US dollar. This devaluation meant that the money that people had saved was suddenly worth significantly less, making it harder for them to afford goods and services. This is because when a country's currency devalues, the cost of imported goods goes up, contributing to inflation. In response to the currency crisis, the International Monetary Fund, IMF, stepped in and provided a record-breaking loan of $57 billion to the Argentine government, which was then under the leadership of President Mauricio Macri. Macri's administration was seen as pro-business, but despite this support, the massive loan failed to stabilize the shaky economy. Things took a turn for the worse in 2019, when President Alberto Fernandez was elected. His election led to a significant sell-off in government bonds. These bonds are essentially IOUs that the government sells to raise money, and when people lose confidence in them, it can lead to a default, which is what happened in Argentina. The government found itself unable to pay back its debts, leading to a default that cut off its access to further credit. Faced with this difficult situation, and in the midst of a global pandemic, President Fernandez chose to print more money to finance programs for cash handouts and salaries. While this move might have provided short-term relief, it also set the stage for inflation to surge even higher. When more money is printed without an increase in goods and services, the value of the currency can fall and prices can rise, leading to inflation. Adding to the confusion, Fernandez implemented a complex set of currency controls and price freezes in an attempt to manage inflation and currency losses. These measures created multiple different exchange rates and made it challenging for businesses to navigate the economic environment. Aside from these factors, there are other long-standing issues that have contributed to Argentina's economic predicament. For one, the country has historically struggled with high levels of corruption, which can undermine economic stability and growth. Secondly, Argentina has been heavily reliant on commodity exports, particularly agricultural products, for its income. This reliance makes the economy vulnerable to fluctuations in global commodity prices and climatic conditions such as the recent droughts. Moreover, Argentina has had challenges with managing public spending and fiscal policies. The country has often struggled with high fiscal deficits, partly due to generous public spending programs. Over time, this kind of financial imbalance can lead to economic instability. Can things get worse for Argentina, or is there relief in sight? Argentina's economic predicament is undeniably challenging, and there's potential for it to worsen before it gets better. One significant cause for concern is the country's dwindling net cash reserves. Consulting firm FMYA estimates that the central bank's reserves have shrunk to just $1.3 billion, which is less than half of the level they were in 2019. These reserves are crucial because they are used to back the value of the peso and pay for imports, among other things. A low level of reserves can limit a country's ability to manage its economy effectively and ward off financial crises. When reserves fall to such low levels, it raises the specter of a potential currency devaluation. This is a process where the value of the currency is deliberately reduced relative to other currencies. In the past, such devaluations have stirred social tensions in Argentina, as they can lead to increased prices for imported goods and contribute to inflation, hitting ordinary people's wallets hard. Another concerning sign is that more people are choosing to buy dollars, hold on to exports, or speed up imports, actions that drain the government's supply of U.S. currency further. The decision to buy dollars is often driven by fears of a weakening local currency, and such moves can exacerbate economic problems by creating a vicious cycle of currency devaluation and economic uncertainty. Furthermore, there's a significant gap between the official exchange rate of the peso and various parallel rates, a discrepancy that has remained around 100% for several months. This situation has not been witnessed since the days of Argentina's hyperinflation, serving as a stark reminder of past economic troubles. So can things get worse for Argentina? Unfortunately, the answer is yes. The combination of low cash reserves, potential for currency devaluation, and the growing demand for dollars all point towards ongoing economic instability. However, it's important to remember that economies are not set in stone and can be influenced by various factors, including changes in policy, economic reforms, and international support. Is there relief in sight? There is no easy answer or quick fix to Argentina's economic woes. It will likely require a combination of responsible fiscal policies, structural reforms, support from international institutions, and perhaps a bit of luck with global economic conditions. While the path to economic recovery may be long and fraught with challenges, it is not impossible. After all, history has shown us that even the most dire economic situations can be turned around with the right policies, determination, and perseverance.